Hello everyone and welcome back to Explain the Charts. Today, September 15th, 2025, we're diving into an in-depth analysis of the NZDUSD currency pair, examining both the latest news and detailed chart data. The macroeconomic landscape is currently dominated by central bank actions and economic indicators, significantly impacting currency valuations. Let's begin by looking at the broader picture on the one-day chart to understand NZDUSD's long-term trajectory. The New Zealand dollar has been notably underperforming against other G10 currencies, a sentiment reportedly encouraged by the Reserve Bank of New Zealand's August policy decision. Indeed, the RBNZ recently executed its sixth consecutive interest rate cut, bringing rates down by 25 basis points to 3.25%, matching lows seen in April 2022. This aggressive dovish stance on the RBNZ's part is a major bearish fundamental for the NZD. Looking at our daily chart, we see some highly unusual and significant price drops in late 2024 and early 2025, with single-day declines exceeding 10%. While these could be flash crash events or data anomalies, they underscore a period of extreme weakness for the Kiwi. Conversely, the US dollar has shown resilience, supported by corporate demand and anticipation of upcoming economic reports. However, the Federal Reserve is widely expected to implement a rate cut this week due to a weakening US labor market and disappointing August jobs data. This expectation of Fed rate cuts could put downward pressure on the USD, potentially offering some relief to the NZDUSD pair. Now, let's zoom into the more recent price action on the daily chart, particularly from August 2025 onwards. We can observe that despite the underlying NZD weakness, there has been a recent rebound from a key support level around 0.587. This level was mentioned in news reports from September 5th as experiencing selling pressure, but the market has since pushed higher. Let's move to the one-hour chart to examine this recent short-term price behavior in more detail. Please note that our one-hour data ends on August 28, 2025, so it provides a snapshot of the market leading up to the most recent news. During late August, the NZDUSD was trading in a tight range, generally between 0.582 and 0.588. We can clearly see a band of resistance forming around the 0.587 to 0.588 area, with several attempts to break above it proving unsuccessful. The lower boundary around 0.582 to 0.583 acted as a solid support zone during this period, preventing further declines. Shifting to the 15-minute chart provides the most current short-term view, covering the period up to late Sunday, September 14, 2025. The price has been oscillating, but generally showing a slight upward bias since September 9th. Current price is around 0.595, a significant recovery from the 0.587 selling pressure mentioned in early September news. We can identify immediate resistance around 0.597 and 0.598, which were recent high points on September 10th and 11th. This recovery could be attributed to hopes for Federal Reserve rate cuts, which would weaken the US dollar. Furthermore, expectations of Chinese stimulus, also mentioned in the news, could be providing a much-needed boost to the Kiwi. The support level to watch closely in the immediate short term on the 15-minute chart is around 0.591 to 0.592, especially evident during the dip on September 11th. Volume has remained relatively consistent, indicating sustained interest, but no extraordinary spikes signaling major breakouts or breakdowns yet. In terms of future outlook, the short-term sentiment for NZDUSD appears cautiously bullish, primarily driven by anticipated Fed dovishness and potential Chinese stimulus. If the Federal Reserve's dot plot projections this week confirm aggressive rate cuts, we could see the pair challenge the 0.598 resistance with a moderate likelihood. Positive retail sales or industrial production data from China for August could also fuel this bullish momentum, pushing towards the 0.602 level, also with moderate likelihood. However, the long-term outlook remains challenging for NZD given the RBNZ's persistent rate-cutting cycle and Bank of America's forecast for continued weakness in 2025. Should the 0.587 support fail, the pair could revisit lows around 0.582, especially if U.S. economic data surprises on the upside, leading to a more hawkish Fed stance. Traders should monitor the University of Michigan Consumer Sentiment Index due out later today, as well as China's August data releases. These upcoming events will be crucial in determining NZDUSD's direction. Key price levels to watch are the immediate resistance at 0.598, followed by 0.602, and on the downside, the critical support at 0.587, with further strong support at 0.582.